SCHD just paid its second quarter dividend, and I'm going to keep it real with you. I have mixed feelings about it. Compared to last quarter, it's up 4.6%, which is solid. But compared to the second quarter of last year, quarter over quarter, which I find more relevant, it was down 5.3%. And it broke its 7 consecutive quarter over quarter dividend increases, a run that lasted nearly 2 years. And that stings because the dividend's consistent growth has been one of SCHD's biggest bright spots during a period where the price has moved sideways. But that doesn't mean I'm giving up on it. Far from it. In this video, I'll walk you through the numbers and what they mean for SCHD moving forward. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Be sure to body slam that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. This is the last call for the Seeking Alpha summer sale. Right now, you can try Seeking Alpha Premium for free for 7 days, which is always the case. But if you like what you see, you can save $60 on your first full year by using the pinned comment in the description below. You know what time it is. Let's grow. Why SCHD? Growth ETFs have been on an absolute tear for over a decade, and it's tempting to chase the rally. But every market goes through cycles. What works best in one era can leave you holding the bag in the next. And I know from the comment section in many of my videos that a lot of you out there are going all in on growth ETFs to get to the moon as quickly as possible. But what happens when the rocket runs out of fuel? And that, my friends, is where SCHD comes in. It's built differently. It doesn't chase the highest yield or the hottest trends. It focuses on quality. SCHD screens for companies with strong, reliable dividends, a track record of growing those dividends, clean balance sheets, and solid returns on equity. It gives you a landing pad for those high-flying rockets when they need a few repairs. And it's not just theory here. SCHD really is a better fit with my portfolio mix than my other favorite dividend ETFs like DGRO. I quickly threw together a spreadsheet here to show the weighted overlap that SCHD has with the core holdings in my portfolio. And then in theory, if I had DGRO instead of SCHD in the value/dividend section, how it would fit with what I have in my growth, cash flow, and cornerstone section. Starting over here with SCHD, we can see that it has a 3% overlap with VGT, and these are both huge holdings in my portfolio. It has a 0% overlap with SCHG, so my growth is almost entirely unique compared to my value section. And then with my cash flow or JEPQ, SCHD and it have a 5% weighted overlap. And then my cornerstone, which is my largest holding out of everything, VU, has a 7% overlap with SCHD. My value side with SCHD is truly unique with the other sections of my portfolio. And I would say that DGRO, on the other hand, has more of a common portfolio composition, similar to VIG and many others of your favorite dividend ETFs. You can see that DGRO has a 19% overlap with VGT compared to 3 over here with SCHD. And with SCHG, DGRO overlaps 18% compared to 0. With JEPQ, my cash flowing asset that I use to reinvest into my core portfolio in the Roth, has a 22% overlap with DGRO compared to the 5% with SCHD. DGRO and VU have a 44% weighted overlap compared to the 7% with SCHD and VU. When it comes to overlap, VU usually has a pretty high number with most of the major ETFs, but you really do want your growth ETFs and your value ETFs to have low correlation, because when tech or growth in general crashes, you want your portfolio to be a proper counterbalance. You don't want it to go down with the ship on the same trends. This is why SCHD has earned a core spot in my portfolio and why I review it every quarter. With that in mind, let's take a look at the Q2 dividend and how SCHD stacks up right now. 2025 Q2 dividend. SCHD paid 26.02 cents per share, which again was up 4.6% compared to last quarter, but down by 5.3% compared to Q2 of 2024. And while this wasn't a record-breaking payout, SCHD still has an impressive long-term track record. SCHD has truly been on another level when it comes to dividend growth, delivering an astounding 11.26% compound annual growth rate since its inception in 2011. And sometimes numbers like that can seem abstract. For example, a 10% growth rate doesn't sound that different from 5%. Linear math might tell you that 10% growth rate grows your money twice as fast as 5%. But the eighth wonder of the world, compound interest, strongly disagrees. Let's settle this with a quick example that compares a 5% versus 10% dividend growth rate. And then we'll look at how SCHD's dividend payments have evolved over the years. This is the spreadsheet I threw together to compare our 10% dividend growth to our 5% dividend growth. And you'll notice here I don't have yield and I don't have price. Investors oftentimes get confused with yield. It is simply a vanity metric except for the snapshot in time when you make a purchasing decision. Yield on cost is all that matters after that. This is because price is always going up and down, and price is in the yield formula. So your yield can change by 2 or 3% in a very short time period, even though the underlying dividends didn't change at all. If the price goes to the moon and it doubles, all of a sudden your yield's cut in half and people are complaining about the yield, but your yield didn't change as a holder, not a new buyer, or vice versa. You could buy in only to have the price plummet by half, and all of a sudden the yield is double. Say it's 8% instead of 4%. Not for you. Your yield on cost, which is what you get paid with your dollars that are invested, is still what it is. So instead, we will focus on the dividend paid per share, and they both are going to start at $4 per share, and this is annually, so about $1 per quarter. So we can see here that column C is going to grow at 10%. And column D is going to grow at 5%. This is what we're comparing. So after year 8, our 10%er was well over doubled. It almost doubled after 7, and that's that rule of 72, 7.2 years. But we'll just say after 8 years, we doubled. And we found that same doubling on 15 years down here. And you'll notice in the time this one doubled, this one's doubled again. So this one's gone from $4 a share to $8 a share. It's up $4. Not too bad. But in the same time, this one's up $12 per share of dividends. But then you'll notice a pattern here, and it is because it's doubled. This one doubles exactly twice every time this one doubles once. So we hit $32 here after 22 years, 29 years, and these are always going to be increments of 7, you'll notice. And these will be increments of 14, that rule of 72 working for us. So when this one finally hits that 16, it doubled again. So it's up 4 times from the original. This one hasn't simply doubled again, it's quadrupled. It will continue to play out that way. And we could take this thing out forever, but you notice by the time the 5%er doubles again, 14 years later, up to 32, this one's gone from 63, not double, but once again quadruple, and it gets more and more exponential. This seems fake, but growing at 10%, you are going to receive $241 per share with the 10% growth compared to $32 per share with a 5% growth. Just making the point that 10 is not double 5 when you're talking about compound annual growth rates. It is exponentially more. And it would get more absurd, obviously, as you come down when you quadruple on each threshold that this one doubles. All right, now it's time to see exactly what SCHD has done in its history as promised earlier in the video. And I'm coming out to one of my famous spreadsheets that I use in the specific series called Retire on SCHD. And we're not going to get too into this scenario. I talk about this one in the other series. We're going to get nerdier in the data tab. But just quickly to explain for a high-level snapshot, if you're new here, this couple invested $500,000 into SCHD when they retired at the end of 2012, so the beginning of 2013. And at the time, it cost a split adjusted $9.45 per share. And that got them 52,929 shares. And this scenario shows that if they did absolutely nothing in the 12 years since retiring, and this is with drip off, dividends not being reinvested, here's their dividend income per year. It's wild. Borderline unbelievable. And this one's just a placeholder. They actually retired. This is their first year of receiving dividends from 16,000 to 53,000. Again, drip off. They still only have these exact original shares that are now worth almost $1.5 million. But really where you should focus is here. This correlates with this video because it doesn't matter how rich you are and how many shares you have. This is what happens per share that you own. You've gone from just over a quarter per share in 2012 to almost $1 per share in 2024. It's almost quadrupled. And the reason the yield always stays the same, so if you're one of those yield chasers, you would say, well, you haven't gone up at all. It's still 3-point-something%. But it's like, no, it's quadrupled, but the price has done something similar. And so the yield never looks that much more impressive. But here's where we want to live on this one. And this is where I track SCHD. And I do this with a few other dividend ETFs as well to audit websites to make sure their numbers are accurate. So this is the dividend we just received. Pay date of 6/30, 26.02 cents per share. And you can see here that on this quarter over quarter column, there's that negative 5.3%. It just so happens that Q2 of last year right here was the highest dividend ever paid in any quarter by SCHD. Now, I'm not giving it excuses, but I'm just saying it did fall short of that. But we increased it from Q1 of this year. And looking at the first 2 quarters of 2024, SCHD paid about 48 cents per share so far. And the first 2 quarters of this one have it at 51 cents per share. So it is about 6% higher so far in 25 than it was in 2024. So it's not all doom and gloom. And that's because that big 22.2% Q1 over Q1. And just to prove I don't drink my bathwater, 1, 2, 3, 4, 5, 6, 7 quarters in a row of increasing the dividend quarter over quarter. You can see as I scroll down here, and that streak was officially snapped. But I'm hoping we can make it year 14 over year 14. And I'm sure the naysayers, and frankly myself, will notice something else that's a little more advanced. This dividend paid in Q2 of 2025 and Q2 of any year is technically the first dividend with the new holdings. The reconstitution happened in late March, but this is the first quarter where those new holdings are reflected in the actual dividend. So it's a little concerning seeing it go down. I hope the trend doesn't continue to be below these. But to counter myself on that one and to call myself out, if you look historically, this has happened before. Q2 here, we were down 5.6%, and then we still went up, albeit a little bit, but still went up the rest of the year. So there's hope. And as you scroll back, usually, and wow, there was not a lot of negative ones there, but usually the negatives, here's a couple in a row, are followed by some big positives. So I'm hoping that when we zoom out and more dividends start flowing in this year, we don't string together multiple negatives. As I just scrolled through, it's only happened once ever where we had 2 negative quarter over quarter growths in a row. I have to admit, I was disheartened when I saw the first dividend of the new holdings show a negative growth, but I'll say I'm still optimistic for slightly positive quarter over quarter for the rest of 2025. This is why SCHD remains a core holding for me, and why I expect it to continue delivering quality results for many decades to come. Final thoughts. SCHD remains my favorite dividend ETF. It just strikes that right balance between yield, dividend growth, and long-term total returns. Its quality-first approach separates it from the rest of the pack, and that's why I'm happy to hold it year after year. Will I add another dividend ETF soon? Probably not. SCHD is the perfect counterbalance to my tech-heavy portfolio, but I'll always stay open-minded as the market evolves. You don't have to agree with my exact holdings, but the key is to stay the course. Never make huge moves based on just a few months of data. Stay patient out there and continue doing your homework. Just remember, the best investments aren't about chasing every hot trend. It's about building a quality portfolio that you can stick with over the long haul. And check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.